Okay, good morning. What is today? Today is 3rd of September. Man, this year's gone fast. Year of our Lord 2024, and we're going live. I've got the Zoom room open, so if you're watching live on Facebook or YouTube or LinkedIn or X, welcome. We're live streaming. Today's lesson will be about credit reports and FICO scores. So I hope you had a great week, a great Labor Day weekend, long weekend. It was great. I enjoyed that. So if you're watching, if you're going to join us in the Zoom room, I got to tell you, I am still experiencing a little fuzziness in the Zoom room. It apparently doesn't impact the live stream. So YouTube and Facebook and Twitter and LinkedIn, those streams apparently are pretty crystal clear. So I'm happy with that, but I've spent some time trying to figure out why we have a fuzzy Zoom room, and I don't know the answer to that. I'm going to keep working on it, but it's today not all that great. So if you're in the Zoom room, I apologize. Welcome. You're in the right place. And if you want to ask any questions, post them in the comments in the Zoom room, and I'll make sure we answer those. If you're on YouTube or Facebook or Twitter, X, or LinkedIn, welcome. Again, we're live streaming. If you want to send a question, I want to try something a little different. I've got my iPad over here, and I would encourage you to send me a text message. So if you've got a question or a comment and you're watching live, if you're a student, you know where to hit me up in a text message. Now, this is 10 a.m. or 10 a.m. It is now exactly 10 a.m. on September 3rd, year of our Lord 2024. So I am looking at my texts. I'll be looking to see if you send in any questions via text. If you decide you want to send in a question at 2 in the morning and it happens to be Thursday, all bets are off. So, by the way, before we get started, we are live streaming now, but we will wait just a couple minutes because I typically wait until about 5 minutes after. So that we can let all the late students show up to the Zoom room, those who would like to be in the Zoom room. After 5 minutes past 10 a.m., I will no longer, accept anyone coming into the Zoom room. So hopefully you have the link to the Zoom room. It should be uhzoom.com. We'll get you to this Zoom meeting. 10 a.m. every Tuesday, personal finance. Welcome aboard. What was I going to say? So yeah, after 5 minutes after the hour, I won't be admitting anyone, so you'll have to watch on YouTube or Facebook if you're not here on time. So welcome again. We'll get started in just a couple of minutes. I do have some questions, actually a question, I guess. Some students are sending in questions via email, which is fine, but I would encourage you again, as I think I have several times already this semester, to check out our group me. You can go to uhgrp.com and you'll go right to our group me. And that's a better place to ask questions via email. If you're asking general questions about the weekly assignments, please don't email those to me. You have a group me set up for that purpose, where other students who are up to speed and have a good handle on the assignments, those students are answering those questions for students who have questions that typically are not common questions. So I've had a few of those via email. So again, thank you for your help. If you're asking your questions in group me, that's a better approach and should get you a quick answer. And if you don't get an answer in group me, by all means, hit me up by email or text message and I'll make sure we get an answer. But if it's a question that only you have and it's a question that doesn't seem to be common to the group, then I would encourage you and appreciate if you check in with GroupMe. instead of sending me an email. I get a lot of emails. And I do have a day job. So happy to meet with you every Tuesday at 10 a.m. and we'll go over your questions. If you email me a question that probably might be better off in the group me, I'm going to grab that question and I'll talk about it when we get to question and answer section at the end of this Zoom meeting. So we'll go over questions and we'll get into that. So we're going to talk about credit reports. I'm going to check the chat and the Zoom, see if we have any questions so far. You guys can hear me okay, I assume. It looks like my audio is working. Testing. Yep. So I'm assuming you can hear me. If you would chat in, yes, thank you very much. Great. Thanks, Nathalie. And welcome in the Zoom room. Okay, it is 10:04. Let's get started. So we're going to talk about credit reports. I'm going to pop up the ticker and the talking points. So the first thing we're going to do is just go over a little bit about this week's assignment, which is to get a free credit report. What you're going to learn this week is a ton of information that you may or may not be at all interested in. When we started teaching this course back in the day, like 100 years ago, when we were all meeting in person, it wasn't really 100 years ago. It was more like 12, 13 years ago. One of the things that we felt like was important to do is to talk about credit, how it works, why it's important. And so in the context of that, credit, one of the things we did, at least I did, starting a long time ago, is I invited you to get a free credit report. And so that's what your assignment is this week. This week's assignment is really pretty light, pretty easy, and you will see it will only take just a few minutes. So I hope, but now the assignment won't take long, but how much you decide to learn about credit reports, about your FICO score, that's what we're going to talk about in today's lecture, and that's what you're going to learn about in this week's assignment. So if you want to learn a lot, there's a ton of information and content in Money Study Group, and you'll have a quiz, obviously, naturally, typically, as usual, to test your learning of credit reports and FICO scores, which we will, again, talk about. So we'll start with just an overview, which is kind of what you're seeing on the screen. Hopefully is just, well, maybe not. Maybe I have the wrong video scanning there. But let me just give you a quick overview. A credit report is a report that contains a lot of information about you, and we're going to talk about that over the next few minutes. FICO score is something else, and that's something you're probably interested in and something you pay attention to, which is great. I would encourage you to do that, but it's very different from your credit report. So let's start off by just in the overview making the distinction that they're two different things, and we'll talk about both. I'm going to share why I think you should get a credit report. We'll talk about that for a few minutes. We'll talk about the benefits. Obviously, there are tons of benefits of having a better credit score. And to get a better score, you have to have a better report. So your report is like just full of data, and that data determines your credit score. So we'll talk about that. The main thing, the bottom line, I would say, is that as far as being a consumer of credit, as far as being a consumer of all kinds of things in your life, if you pay attention to your credit and the things that develop your credit score, which we'll talk about today, the bottom line is you're going to have better cost for borrowing, including the big one, which is mortgage rates. So let's just jump in and see if we can. I'm going to get rid of that, and I'm going to try to go here. Now I'm pushing some buttons, which I'm always learning how to push buttons and make things work. So bear with me for a minute. I don't have a producer right now. My team in Lansing is off today, so If you're listening, Lansing, thanks for nothing. So here we go. The first thing we just did a little bit of an overview. Well, let's talk about really kind of why to get your credit report. One thing that's not working so well. I have the wrong. Hold on just a second. We should be good there. Why your credit report matters. Why get a credit report. So I think I'm synced up now with all my buttons. Again, thank you very much, Lansing support team, for not being there to help me out today. If you want to volunteer to help produce the show, well, give me a holler. Anyway, so your credit report, it really does matter, and it does have information on it that you're probably going to want to be aware of, and you're going to learn about that this week. But to start off, I just want you to know that your credit report contains tons of information, and some of that information may be a surprise to you, and you won't know that if there's surprising information on your credit report if you never grab a free credit report. So that's your assignment this week, is to get a free credit report. So if you've already jumped into Canvas, you see there's a link there to do that. And I want to just kind of let you know that the reason we're doing that is not just for an assignment. It's actually to help you identify any surprises that might or might not be on your credit report. Every semester, students share with me what they found on their credit report, and quite regularly we find surprises. If you're listening, watching, and you aren't, maybe you're not even part of our course, but I would encourage everyone as just a part of your normal personal finance habits to grab a free credit report. You can do that, I think, up to 4 times a year. So there are, I can't remember now, 3 or 4 different credit bureaus. You're going to learn that. It is on the quiz. And you can get one free from each of these bureaus. So I think there are 3 now. There may be 4, but each one allows you to get a free credit report each year. So if you just time it out, you can do multiple credit reports each year for free. So, and it's an important thing to do. You probably already have a pretty good idea, and if you don't have a good idea right now of what the benefits are for a better credit, improved credit, then you're probably not paying attention to your credit score. But most of you, I found, really pay attention to that credit score. And so today, this week, in this assignment, I'm going to ask you to take that to a new level, which is take a look at your credit report, which is generally has a tremendous amount of data, information related to you. And it is that data, that information on your credit report is what determines and generates your credit score. So the benefits are huge. The biggest benefit, again, the bottom line I would suggest, is your cost of borrowing. So if you pay attention to your credit score, if you pay attention to what's on your credit report, the biggest benefit is your cost to borrow it will be reduced. So remember, I think I've mentioned this before. If I haven't, let me say it very clearly, that credit isn't a privilege. Credit is a product. And so over the course of this semester, I'm going to be teaching you how to manage credit. Today, I'm just kind of doing an introduction to help you understand why it's important to manage your credit and how to do that through your credit report, which, again, determines your credit score. 2 different things: credit report, credit score. But the bottom line is, in the course of teaching you this course, the big idea of the course is to teach you how to become a millionaire by the time you're 50. And so credit debt is always, in our culture for sure, a very important part of personal finance. So in the context of this course and the big goal, the big idea of becoming a millionaire by the time you're 50, if you can reduce your cost of credit, you will really be potentially moving the needle. And again, we're gonna get into some very specifics. You're gonna do the Credit Crush assignment, which you may not be familiar with just yet. But it is one of my favorite assignments in this course, because in the Credit Crush assignment, I'm going to show you how much credit costs you and how it really works, where the rubber hits the road, the rubber meets the road, in terms of credit and credit cards and credit, the cost of credit. So that assignment, again, is one of my favorites. And you're going to do that assignment starting not next week, but the week after. And so what you learn this week will be very helpful. It's general information. It's not really specifically going to relate to your financial plan, because you're not going to do a whole lot in your financial plan this week other than make sure that it's set up in right capital. And I've been watching. I get an email notification every time one of you signs up for your right capital account. And then I get another email every time one of you hits that little complete button. So thank you for doing that. I know you're watching the video tutorial that I put in Money Study Group to kind of guide you through that process. And I can tell you're doing that really well. And that's really all you need to do this week in your financial planning portal at Right Capital, is just make sure it's set up. You've already given me screenshots in this week's assignment to show me some of your expenses. So thanks for that. So next, let's talk briefly about mortgage rates. When we talk about lowering your cost of borrowing, there's no bigger ticket item typically for most people than their mortgage. So you're going to be doing, in the next couple of weeks, you're going to do some assignments. You're going to do some research to identify a house that you can afford. I'm going to call it your dream house, and you're going to go out and do some research based on the idea that you've already got your dream job. Now, if you don't know this, let me just give you a heads up. Over the course of this semester, we're going to set you up in your financial plan as if it's 10 years down the road. So you're going to be doing some research to pretend that you're 10 years older and that you've already graduated and that you've obtained your dream job. And you had to do some research. You're going to make sure you do some research to figure out what is your major, what is the job you would love to have when you graduate? And based on that, based on the income from that job, you're going to do some research, again, pretending that this is all true and this is your life. You're going to do some research to identify what house would you want to live in? What house would you want to buy? And you're going to go out and you're going to actually acquire a mortgage on that house. Obviously not for real, but for pretend. And you're going to have to do the research to figure out how much is that house going to cost? What are the taxes going to be? What do you think the insurance will cost on that house? What kind of rate will you get on the mortgage? And so that's all part of your research in this assignment, this upcoming assignment, to kind of create a financial plan based on the idea that you're 10 years older, you've graduated, and you now have this dream job, and you had to buy a house, you had to buy a car, so that's all coming. But just to get you ready for that, I just want to mention mortgage rates. It's a huge part of most people's financial plan, and it will be something that shows up in your capstone assignment. So pay attention to the mortgage data card. That's what we call every data card. Every piece of your financial plan is a data card. So you'll see some tutorials for how to add your mortgage to your financial plan. So that's an important part. Another thing that I want to mention and highlight is one of the benefits of better credit is you actually get better job offers. Now, that may be a surprise to you. You may not realize that your credit impacts job offers. But I can tell you, I don't have a tremendous amount of data to prove this. You can do a little of your own research if you want to prove it or disprove it. But I can tell you from my experience when I was a State Farm agent, And I was a State Farm agent for many years. And so if you're a State Farm agent, you're a business owner. You're an independent contract agent. You're not a W-2 employee. You're a business owner. And that's what I was for many years. And so in the process of being a State Farm agent, I did a lot of hiring and firing. But when I hired someone, every time I hired someone to work in my agency, they had to be approved by State Farm. So even though it was my business and I made the final decision, I couldn't hire you if you had like a criminal record. I couldn't hire you, in fact, if you had a racked up credit history. So if you had bankruptcy, if you were just had a terrible credit score, then State Farm would not approve you to be my employee. So State Farm's not the only company that did that by any means. That's just one of the things I wanted to make sure you knew and that you were aware of, because if you have never thought about that before, now you can think about that as another reason to motivate you for this week's assignment to check your credit report, to make sure there are no surprises, so that you can keep up with a good quality credit score. So that's better job offers. So let's talk a little bit about what's on your credit report. You're going to take a quiz. You're going to read a white paper I put in Money Study Group. I posted a really helpful white paper, I guess, on credit reports and what's in it. So let's talk a little bit about what's on your credit report. First of all, as you can imagine, it's personal information, including your Social Security number. And that brings up a point I want to make about this week's assignment. If you happen to be a student who does not, maybe you're a foreign student and you do not have a Social Security number, if you do not have a Social Security number, please make a note of this. For those of you students who are paying attention and answering questions in GroupMe, this is one of those topics where you should grab a screenshot to let me know you're sharing what you're learning. For the students who asked the questions that I already answered in the Zoom meeting, and the answer to the question is, if you do not have a Social Security number, then you will not do the credit report. You'll do the alternative assignment. That's only for students who do not have a Social Security number. So let's say you have no debt, but you do have a Social Security number. Well, guess what? This week's assignment, getting a free credit report, is going to be super duper easy for you, because your credit report is going to show basically nothing, which is fine. But if you don't have a Social Security number, you won't even be able to get an empty credit report, a credit report that shows nothing. So please, just make a note. If you don't have a Social Security number, then you won't be able to get a free credit report. In that case, you will need to do the alternative assignment, which is posted in Canvas. So be prepared, the personal information. Another thing that's in your credit report is your credit account. So again, if you have no credit, if you've never opened a credit card, your report should show that you have no credit accounts. On the other hand, and this is probably the most common surprise that students discover when they do the free credit report, and that is that someone, somewhere along the way, decided to open an account in your name, with your birthday, with your Social Security number. In that situation, you will discover, when you do your financial or you do your free credit report, you will discover the surprise that you do have an account that's been opened by someone. And that'll give you the opportunity to go and kind of do a little research and figure out what's at the bottom of that. Sometimes parents do that for their students, for their children, so that they can pay that bill, they can create a credit history. And that's generally the purpose. Usually it's not something bad, but sometimes it's just a matter of, you as a child have a Social Security number, maybe your parent doesn't, and they just need credit. There's other reasons. So all I'm saying is be prepared. You may experience the surprise that you have an account that you didn't know you had. Another thing that is on your credit report that does impact, and you'll see how this impacts your credit score, is inquiries. So I'm not even going to go into great detail about what a credit inquiry is, but there are things that show up on your credit report, and you will see those when you do your credit report. Many of you will, some of you will not if you haven't done any inquiries. An inquiry is something that a credit company does on you when you're looking at a new car or looking at something you want to buy with credit, and you go ahead and sign up to see if you qualify. That becomes an inquiry. And that has an impact on your credit score, and it shows up on your credit report. So let's talk a little bit about the FICO score. I want you to understand kind of what goes into your FICO score. It's really not that mysterious if you know. And again, you got a white paper in Money Study Group, which I would encourage you to download and read and maybe save for future reference, because it does have all of the details and the everything that goes into your FICO score. So let's just talk a little bit about what goes into your FICO score. First of all, as you probably know, is your payment history. So if you've got credit and you're paying that credit, how you pay that credit, your payment history, is a pretty good part. I can't remember the percentage, 35%, yeah, payment history. So let's say that you have a creditor, and I have been a creditor for many times for people who needed to borrow money, and I do the paperwork, lend the money, and then I keep track of their payment history. And you can imagine some folks don't pay their credit on time. Some get delinquent, and that is your payment history. And if that's you, if you pay and you're late and you miss payments, that's your payment history, and that obviously, hopefully it's obvious, will ding your credit score, and it does show up on your credit report. So payment history is one thing that is involved in your FICO score. How much debt you have, how much you owe, is again something that impacts your credit. Excuse me. So how much you owe, total debt, and the ratio of the used credit. So we all have kind of a maximum credit that we can have, how much credit we're allowed to have by the credit system. And if you if you max that out, that has an impact on your credit score. And so it's how much you owe is part of that calculation. 30%, how much you owe. Okay, what else goes into your FICO score? This one is most people don't realize that how long you have credit. If you've got an account that you've had for a long time, that gives you 15%. That will improve your credit the longer you have the account. So we'll talk about misconceptions and some tips in just a few minutes, but just remember the length of credit is an important part of your credit score. Probably you didn't know that. Hopefully you'll know that now. And I think that is on the quiz. Another part of your credit score is new credit. So 10% of your credit score comes from, do you have new credit? So I told you that the length of your credit history has generally a positive impact on your credit score. So new credit, what do you think, that's positive or negative on your credit score? Probably negative. New credit accounts is probably most likely going to reduce your credit score. So every time you get a new credit card or a new credit account, typically that's going to degrade a little bit your credit score, a little bit or not so little. But it is a small number, 10%. As you saw, payment history, 35%. Payment length was 30%. Amount of credit, I can't remember the numbers, but you saw them, and you'll see them when you read that white paper. It's all spelled out for you. So new credit is one. The credit mix is also one of the things that's on the credit that impacts your credit score. Think about credit mix as like student loans. That's one type of credit. Car loan is another type of credit. Credit card is another type of credit. Payday loans is another type of credit. So each of these types of credit creates your mix of credit. And I'm not smart enough to be able to tell you which ones give you more negative influence on your credit score and which ones may be more positive, but you can kind of guess that credit cards and payday loans are not as good as student loans and mortgages. So things with good collateral are typically going to be better for your credit score. If you buy a car on credit and you're upside down and you owe more for the car than it's worth, you owe more for the car than you could sell it for, because cars have a tendency to really depreciate. Same with RVs and boats. RV, that's recreational vehicle. RV, boats, toys basically that you buy on credit, they depreciate quickly, and that's kind of what happens with your credit mix. If you're borrowing money for stuff that depreciates, then you're going to see a ding in your credit score. Let's see, what's next? So just want to take a minute to highlight, again, every semester, this topic of credit report versus credit score. It sometimes is a little confusing. Sometimes we get the names mixed up. So I don't care what your credit score is. That's not part of this week's assignment. I'm sure you will somehow share that with me. Probably won't be able to avoid it, but it's not what I'm looking for. Okay, this assignment this week is not for you to determine what is your credit score. I do want you to understand your credit score. I want you to understand what goes into it. I want you to know how to manage it. But it's really the credit report that is the focus of this week's assignment, because you're going to get a credit report so that you can see what goes into it. And if you don't have credit accounts, like if you've never signed up for credit, then I'm afraid the assignment may not be all that, getting the free credit report may not be all that relevant or impactful for you. So, but if you're a little older and you've got more credit accounts, you're going to see a lot of information and it could be very helpful. Regardless, I want you to know the difference between a credit report and your credit score. And moving forward in your life, my hope is that you will commit to get a credit report on a regular basis as you move forward in your financial life. So just know that the credit report and the credit score are two different things. The credit report has the data that determines your credit score, and they do both matter. The credit report, again, is the data. If you pay attention to the data, if you want to clean up your credit, that report becomes a tremendously valuable tool because it has all of the details, all of the pieces of data that will flow out into your credit score. So they're both pretty important. Obviously, your credit score is what determines like the cost of borrowing, and it is what people see when you do inquiries. They see your credit score. That's all they see. That's all they care about is, what kind of customer will you be for them? And remember, credit is not a privilege. It's a product. And they're evaluating you. The whole credit industry is evaluating you, not as a human being, not as a person, but as someone who will become their customer. Hopefully, from their perspective, a customer for life. So it matters what's on your credit report, and it matters what your credit score is. And so I'm going to encourage you to monitor both, not just your credit score, which is what a lot of you are already doing, and that's great. Keep doing that, but add this new element, this new piece of the puzzle, especially as you move forward, as you graduate, as you get a job, as you start to have more credit accounts, credit cards, car payments, mortgages, and so forth. The credit report, very important. All right, so let's talk a little bit about some tips. We're moving right along. We are going to cut. This will not be a full hour, I don't think. So I'm going to answer any questions you have. Oh, let me check my text message timeout. I haven't seen. No, I have none. Now, I'm assuming. So that means if you're watching on YouTube or Facebook or Twitter or LinkedIn, you're welcome. If you have a question or a comment, you're welcome to send it to me via text. If you're a student in the course, you know my mobile phone number because it's on the syllabus. And now's a good time if you want to chime in. Excuse me. If you want to chime in with a question or a comment for this Zoom meeting, do that before in the next few minutes. It's 10:30 a.m. Don't feel free to not send me a text message at 2 in the morning. But again, if you're watching live on YouTube, Facebook, LinkedIn, and you want to send me a text message, I am checking my text messages for those. I will go check the comments. I know lots of comments are coming on YouTube, but I'm just not reading those right now. Just trying something new, text message. If it doesn't work, we'll go to something else. In fact, I should probably be logged into YouTube over here on my iPad. Maybe I'll try that next. Okay, tips for good credit. Let's see what we've got for tips. Obviously, pay your bills on time. Tip number 1, pay your bills on time. I'd say pay attention to your balances. I'm going to teach you how to manage credit, how to manage debt. So that is coming very soon in this course. It's called the Credit Crush Assignment. I want to teach you how to crush credit in your financial life, and you will learn how to do that and strategies to do that. That's coming. So that all of the main tips for managing credit will be part of future assignments which are coming. The Credit Crush, one of my favorite assignments in this semester. Same with the credit score. Again, if I can teach you how to manage debt and credit, I will be teaching you how to improve and continue to improve your credit score. So they're both the same. I mean, the things that you will do in terms of tips for how to manage your debt will be the same things you will do for how you manage your credit score. That's how they work. So let's just keep going. A couple of misconceptions about credit. I don't know if you have these misconceptions, but I just want to mention that sometimes I get the question, if I check my credit a lot, does that hurt my credit score? And it doesn't. And that's different. Checking your credit score, or checking your own credit, like doing this week's assignment, getting a credit report, is not the same as having a credit inquiry. So just so you know, that's a misconception. Some people don't realize that. Another one is that you really only have one credit score, and that's not true. FICO, that's the one we use the most, and you will learn what the definition is for FICO, but there are multiple ways, multiple models out there for measuring your credit score. Some are more popular than others, but the FICO score is the most commonly used. So that's one misconception, that there's only one credit score. Another one, credit score misconceptions. The first one I would say about credit scores and a misconception is that if you earn more money, you have a better credit score. I think I may have told the story. If not, let me tell the story about when I first became a certified financial planner in Houston, Texas, I was working, my agency was on El Camino and Pine Lock, so it was in zip code 77062, which I didn't realize at the time 77062 was one of the top income zip codes in the country, and it's right down the street from Bay Oaks Country Club, very large houses. Now, since then, I was a State Farm agent in Clear Lake in 2000, the year 2000. And so that at that time, that zip code was one of the wealthiest zip codes in the country. I think today it's probably different because, well, we've had lots of changes in the country. But anyway, all that to say, when I became a certified financial planner, I was a State Farm agent at the time, the first and only State Farm agent who could charge a fee to do financial planning. And so when I started doing financial planning, I offered that service to my clients who were State Farm clients, right? I was a State Farm agent and a certified financial planner, an unusual combination. But at any rate, I started meeting with people who were clients doing financial planning. And my assumption was always, because these folks had high incomes, they lived in really big houses, and they drove up to my office in really nice cars, I always assumed they were wealthy. But what I discovered was many of the folks I was working with were buried in debt. Like, they had more credit. They lived beyond their means, even though they made a lot of money. Now, that's a kind of a relative term, right? Living beyond your means. What I'm trying to say is that just because you have a high income doesn't mean you have a great credit score. And that's what I discovered. A lot of folks were they were having trouble managing their debt because they had a lot of debt. They didn't own the house. The bank owned the house. They didn't own the car. The bank owned the car. And they had credit card bills, and they had other debts. So while they lived in the wealthiest zip code in the country at the time, and they looked wealthy from every angle, they were really just struggling to manage their debt. And that's why this topic is an important topic. And that's one of the kind of misconceptions about your credit score, that you have high income means you have good credit score. That's just not true. Another misconception that I want to mention is some people think if you close your credit accounts, you're going to improve your credit score. Well, remember that the length of time you have these accounts open actually improves your credit score. And so if you just start randomly closing accounts, if it's an old account that you've had for a long time, then closing that account, well, you may think that's going to improve your credit score. It may do the opposite. Excuse me, I'm still struggling from whatever it was last week that landed in my chest. And anyway, so that's a couple more credit score misconceptions I wanted to highlight. Now it's kind of time for a Q&A session, and I'm going to look into so Nathalie, I hope you had a great question. The question was, why does our credit go down every time we pay something off? Never mind. I just answered it. Awesome. Thanks. That was a good question, though. It's a very good question and a very common misconception. You pay off a credit account and you assume that's going to improve your credit score, but it does the opposite, and that's why. So, great question. Thank you. And I'm going to look for any other questions. I'm starting in Zoom, and I don't see any. I'm going to jump on over to, now you know what I'm going to do? I am going to, while we're answering these questions, first of all, I'm going to answer a question that I've had. I got some questions. Here we go. I'm looking, you can't see it, but I'm looking at a list of questions. There's really 2 questions I got from a student via email, Julia, and I suggested in response to the email that I would answer these questions in the Zoom room. So, by the way, I'm going to start trying to do that. When you send me an email with a question, typically, if I get a question from a student that is common, like if I get it more than once, if it's not something that can be answered in the group me, then I'm going to create an answer, probably a tutorial, and post it somewhere. But most of the questions I get are like one-off questions. A student has a question that no one else actually had, and that's what this was. But this is a good question, one that I get occasionally, and one that I think students should be asking, which is this. Julia says, will you provide feedback on each assignment attempt? And will you only take the highest attempt? So that's actually 2 questions. The first one, will you provide feedback on each assignment attempt? So here's how feedback works. You probably noticed if you didn't get any deductions, you may get the little thumbs up or a happy face. I'm grading over 100 assignments a week, and so I generally, if there's any reason that I'm giving you a deduction, you will get feedback. And I feel like that's one of the things we talked about. What do you have the right to expect from me? And one of the things I believe you do have the right to expect from me is that if you get deductions, I tell you what those deductions are. Now, on that same note, let me just mention, some students are not even reading the instructions on the assignment, and they're submitting their assignment, and it's not even half complete. And that's only a few students, and I hate to even bring it up, but I do want to bring it up because if you're one of those students who doesn't bother to read the instructions and you don't complete the assignment and you send it in anyway and you make me have to grade it, I don't feel like you have the right to expect me to spell out what's already in the instructions. And so my response to you in answer to this question, will I provide feedback on each assignment attempt? Yes. And my feedback will be read the instructions and resubmit. I'm not going to spell out everything you missed because you didn't bother to read the instructions in the first place. Now, that doesn't apply to most of you. It's a small percentage of students, as always, who submit assignments as if I'm not going to grade them and not see that you missed half the assignment. But if you're one of those students who likes to submit assignments that are totally incomplete, don't expect me to spell out what you missed. I'm just going to say, go do it again. And you're probably going to get a 0 because I'm not going to give you any points if you didn't do the assignment. And doing the assignment halfway is not really doing the assignment. So FYI. And then the final part of that first question, will you only take the highest attempt? So the way that works is if you submit an assignment, if you submit it in early by Friday at 3 p.m., if there's any deductions, I'm going to give you some feedback, and you have until the due date to resubmit it and get the extra points. If you submit that late, you're not going to get any extra points. In fact, you will get whatever you got the first time you turned it in. So don't turn them in late, even if you're correcting your assignment and you've captured the opportunity to do the assignment early. So hopefully that makes sense. So yeah, typically I'm going to take the highest attempt. I think hopefully that's obvious. So that's the first question. Will you provide feedback on each assignment attempt? Typically, if you do well, I'm going to give you a thumbs up. I'm not going to give you feedback unless you miss something. And then, yes, I will give you feedback. And then you get the highest attempt. If you resubmit it by the due date, you get the highest attempt. If you submit it late, after Tuesday at 10 a.m., you get 1 point. And you won't get the 1 point unless you complete the assignment. If you do the assignment halfway, you're not going to get 1 point. You're going to get 0. And you'll get a reminder, resubmit, read the instructions, resubmit. If you wait for 2 weeks past the due date, you get 0 and you get a 20-point deduction. So all that is repeated. I have to say it again, but I feel like I owe it to a few students who are going to push the envelope to try to do as little as possible. And then they're going to want to argue with me to get an A at the end of the semester. And that's not going to win. But for most of you, you're doing an awesome job. Keep up the good work. Thank you very much. And hopefully this helps. Next question was, for the right capital portion of the assignment, could you please confirm if we only need to take screenshots of the income and expense sections? That's the question. The answer is read the assignments. Do I really need to confirm that if it's in the assignment instructions? I'm not sure why you're asking that question, but that's a question you should ask to GroupMe, because you don't want to ever ask a question to your professor that is really not a question you should be asking your professor. Ask your students. Ask that in GroupMe, I think is now. That was the only student who sent that question in, so I'm not, that's what I'm going to do every week. If you send me a question, I'm probably just going to save it and answer it in the Q&A session of the Zoom meeting. So that's that. Okay, let's see what's next. I don't see any questions in. I'm going to jump into YouTube. This is a little scary. Let me mute my iPad and see if I can jump in. I should have done this before, but I'm trying to jump into. Okay, here we go. I'm jumping into YouTube. And I'm going to see if there are any comments. YouTube is the one that most students are. Gosh, I'm having trouble getting there. I'm sorry. View channel. There we go. I should show you this. It doesn't look like we have any comments yet. View channel. There we go. I'm watching myself now on YouTube, which is quite weird. It is quite weird. Okay, so I don't see any questions at the moment. So I'm just going to wrap things up. I'm going to jump into the what's next, give you kind of a highlight about what's coming next week. And I'm going to close YouTube. There we go. Okay, next time. I think what I want to do for next time is just show you a list. Let me show you a list. I need to sneeze. I'm going to apologize in advance and mute my mic before I sneeze. I'm having trouble sneezing, so maybe I don't have to sneeze. Okay, this is next week's assignment. This is not this week's assignment, but just wanted to show you what was coming next time, and that is the parental interview. It's one of my favorite assignments to grade, where you share your story, including your first memories of money, and you interview a parent. So I'm going to just tell you before you start this, if you want to start thinking about who you're going to interview, make sure that you select someone who is in the generation above you. So it's not for roommates. It's not for siblings, not for brothers and sisters. It's not for cousins. It's okay to do an aunt, an uncle. A parent is preferable. A grandparent is sometimes even better. But this is a parental interview. And so that's, again, it's one of my favorite assignments. So I just wanted to plant the seed and let you know that it is one of the things that we will be doing next time. So next time, I'll see you next time. If you have any questions, now you can pop them into, if you have questions, I would pop them into GroupMe instead of YouTube. But if you want to post this week's comment, this week's class collaboration comment, we didn't do that yet. So let's see. It's the end of the day. You know what? I should have, but I don't have class collaboration comments. So is anyone in Zoom, do you want to make a recommendation for this week's class collaboration? Is there something that you think would be interesting to learn from other students? I'm going to give you not a few minutes. I'm going to give you like 15 seconds to take advantage of this opportunity to recommend this week's class collaboration. And if I don't get any answers in Zoom, going once, going twice, pretty much gone. So then here's the deal. I think this would be a good class collaboration, is for you to tell me what you think would be a good topic for discussion, a good conversation that would be helpful for you, that would be interesting for you. So what is it that you would like to have as a class collaboration segment? So that's this week's class collaboration, is your idea for weekly class collaborations. One in particular, one specific. Any ideas you have, I'm very interested, and I'll look forward to seeing your suggested class collaboration, weekly class collaboration, so that in future lectures I can throw out that secret class collaboration and I can say this one was recommended by a student. So I am very curious to know, what is your suggestion for a weekly class collaboration? I don't see anything in Zoom, so you guys maybe you've already checked out, maybe not. But if you're still here, thank you for being here in Zoom. I'm going to go ahead and end the Zoom meeting now. And then shortly after that, momentarily, I'm going to end the live stream. But for now, I'm going to wave goodbye to everybody in Zoom. Thank you guys. Appreciate you being here. And I'm going to end that, going once, going twice, clicking the end meeting. That meeting is over. Now I'm going to jump back over to the live stream, and I'm going to say goodbye until next week, and I'm going to hit the finish button and end the broadcast now.